Okay, this is what we have here. We have our gold daily time frame. Okay, so I'm just gonna do a quick lesson just to walk you through behind the logic of this trade that we have been looking at since last week Thursday. Okay, so I'm just gonna explain to you in brief. So, but before we get to do that, let's just go back a little bit and then we get to see what price has been doing previously. So, by just looking at this chart from here, you can see that our price has been bullish. Okay, so now as you can see that our price has been bullish, and then that's the same thing we were expecting until price get to push down and take out this low here. Okay, so the reason this low here, it's significant in indicating that we have a shift in market structure. It's because this is the low that begins this rally here. Okay, so this is the low that begins this rally of taking out this buy side liquidity here. So it makes it significant. Okay, so this is the low that begins the rally of taking out this buy side liquidity here, which then confirms to us that our price is still bullish. But all of a sudden we get to see a decline in price. Okay, and then price decline, it gets to come back to this low here where this rally begins. Okay, so we get to see this low here which begins this rally here being taken out. Okay, so that indicates a shift in market structure, that our price is most likely bearish now. It has changed direction. Okay, so what we're going to be anticipating as price was going down, and since we have already established that we have a shift in market structure, it simply means any move going upwards now, we are anticipating it to be a retracement, meaning it's a short-lived move. Okay, if it's going up, so we are expecting it to just be a retracement and price continue to go in that direction which was established by taking out this low here, which is which indicates a shift in market structure. So if you get to look here, as price was going down, you get to see that we have a lot of imbalance here that has been created. So you get to see we have a fair value gap here, and then we have another fair value gap at this level here. So and then we pull our fib here from this high to this low here. We pull our fib, and then we're gonna take the fair value gap which is above premium. Okay, so the fair value gap which is above 50% of our fib is the one that we're gonna take. Okay, so you can see this is the fair value gap that we gonna take, and then we're gonna leave this fair value gap. Okay, so basically this is how you get to select which fair value gap to take. Okay, so since we want to sell, we're gonna take the fair value gap above premium, above 50%. So maybe let's take, you were looking at the setup where you wanted to buy. You're gonna take the fair value gap that it's below premium. Okay, the fair value gap which is on your discount side. Okay, because you want to buy a discount and you want to sell it premium. Okay, so that's simply the logic of basic supply and demand. Okay, so that's what we apply here. So we use the fib to determine within the range that we have already marked and within the range that we are expecting price to retrace into. So this is the range that we are expecting price to retrace into. So the reason why I didn't use this spike here, if you look at this spike here, it's too big, so it's just manipulation, this one. Okay, so I'm just gonna use this decent spike here, but if you want you can use this one, but I wouldn't advise it. I wouldn't advise anyone to use it. So just use this one to be on the safe side. So let's just remove that. So this is the fair value gap that you're gonna take, okay? So price push back to this level here as you have anticipated, okay? So price push back to this level here, and then it gets to decline, and all of a sudden you can see that our price enter into consolidation, and then all of a sudden you get to see price has some strength, okay, some strong momentum to go up, okay. So it goes up to this level here to close the fair value gap completely, and then all of a sudden, and then after that you get to see a sharp decline in price, leaving behind a lot of what, liquidity void, and we get to see this low here being taken out, this low here which begins this rally here being taken out. So this now indicates a shift in market structure within the range that we have identified. Remember, we have already established here that our price is bearish. So this is some sort of like a confirmation on our bias, okay? So this is just putting an emphasis on what we already know or what we have already established. So we get to see now price pushing up and then it push down. Hey guys, just a quick shout out to today's sponsor, GhostTraders. So for those of you who want to sponsor the channel or want to learn and master smart money trading, so we have a course bundle here. A course bundle, it simply involves all the courses that we have, okay? They are included in this package. So just with 99 US dollar, you get the whole package. You get all our courses that are available on our website, okay? So the normal price is 330 US dollars, okay? So if you want to check out with PayPal, we accept PayPal, and we also accept credit and debit card through Stripe. And for those of you who want to learn just the basics, you can check our Udemy course. We have the QML, trading with order blocks and fair value gaps, and we also have this one, how to trade order blocks, order flow, and fair value gaps. Okay, so these courses, they just cover the basics of smart money trading. But if you want the full experience, or you want the advanced level, you can just check the package of 99 US dollar. Let's get back to the video. We have a shift in market structure here, and then if you get to look at here, you can see that you have a fair value gap here, and that fair value gap, it's lining up with our order block. And then you can see here price getting to this level of our fair value gap, it closed the fair value gap, and then it goes deep into our order block less than 50%. It goes into the range of the first 50%, and then guess what it does? You get to see a decline in price, okay? So basically, if you notice here how price approach this level here, you get to see that we have price moving in a compression, okay? So we have price moving in a compression to get to this level here. So I believe some few years back I did some lessons on compression, okay? So if you go to our website, you go to our blog, which is for free, you just search compression, or you look at one of our premium courses. I'm not sure, but I believe it might be the smart money trading course, okay? So if you look at that, I believe you can find a lesson on compression, but I'm not sure about that. But what I'm sure about, it's the blog article that I did on compression. So basically, one thing that I've said is that whenever we get to see price moving to a certain direction in a compression way, okay, so you can see price is moving up but in a compression way, that indicates that there is an institutional reference point ahead of that move, okay. So you can see here, after that we can see here there is a fair value gap and price gets to that fair value gap, and then we get to see a shoot in price. Okay, so compression it's always followed by a shoot in price. Okay, so you can see here we have compression and then we have a shoot in price, and also here you can see compression and then we have a shoot in price. I hope this is clear. So basically, let's go to 4-hour time frame and look if we can see something there. So if you look on a 4-hour time frame, you can see that it seems as if price went up a little bit. Let me just mark this high here. So it went up a little bit and took up this high here. But if you look close, you can see that there is a fair value gap here. Okay, so price spiked that fair value gap also, and then we get to see price pushing down. Okay, and if you look the way price is pushing down and you look at the way these candles are, you can see that these are long range candles here. It seems as if price has a lot of momentum to go down. Why? It's because compression is followed by a shoot. So somebody raised something to me about these prices being bullish on weekly time frame. So for an example, if you look on weekly time frame, you can see that we have this level here, which is the level of our order block here. In as much as price might look like it's bullish on the bigger time frame, but we need to keep in mind that any change or shift in market structure, it will first appear on the smaller time frame, and then the bigger time frame will just catch up to that reality. Okay, so it will just appear on the smaller time frame, and then the bigger time frame will catch up to that reality. But at the same time, we need to keep in mind that our price is fractal, meaning whatever you see on the smaller time frame, in as much as it might not immediately appear on the bigger time frame, but whatever you see on the smaller time frame, eventually you're gonna see it on the bigger time frame. So this is what we have here. We have this order block here. In as much as we have established on our daily, with our daily time frame, that our price is going down, it doesn't mean that we should be ignorant of the possibility of price getting to this other block here and then changing direction. Okay, so that's why you need to set up your take profit in a way that you get to take into account the possibility of price retracing at this level here. Or you just need to make sure that your you also have your stop loss in profit, and you also take some partials while you are watching what price is doing. Okay, in as much as you are anticipating that price eventually is going to get to this level here, but keep in mind that the bigger time frame has not yet adjusted to the reality of the smaller time frame, which is our daily. In this case, it's smaller relative to our weekly time frame. I'm not saying the daily time frame is a smaller time frame, no, in relative to our weekly and monthly time frame. So basically that's how I get to look at this thing. um so basically that's how I get to look at this thing, having the idea that okay, whatever we get to see on the smaller time frame, in as much as it might not have impact on the bigger time frame, but remember, everything begins with the smaller time frame before it gets to be visible on the bigger time frame. So basically that's the same thing that we get to see here that I'm expecting. And if we go on 4-hour time frame, from daily going down, you can see that those time frames, they are clear on what price is doing. So let's go and look at our 1-hour time frame. So I've done most of the analysis because I was trading these. So yeah, this was the fair value gap I was looking at. Now let's see if we have something interesting at this level. So you can see, if you just look from 15 minutes you can see that it's clear that our price is bearish. So basically that's it. That's how you get to look at this thing. Price is doing the same thing. There is nothing complicated. Let's not overcomplicate trading. It's very simple and it should be kept like that. So thanks for your time. See you on the next one. Shalom.